going on, guys, and welcome to this public session hosted here in Discord. Now, if you're watching this on repeat on YouTube, which I know some of you may be doing, then you can join the now working link down below. If you have watched any of the previous videos and the link hasn't worked, please do check that link now because it is reset and it should work. So, in this session, we are talking about the principles of the purpose of you being in the market. Now, some people may think, well, this is a pretty obvious, this is a pretty obvious thing. We want to find an area to sell away from and we need to make 10% a month and we need to do X, Y, and Z. When really we need to scrub this idea from our mind. What we really need to do is focus on a couple of very simple principles. Okay, these principles being, what is our daily bias? Now, of course, if you want to understand what a daily bias is, it doesn't mean you have to learn the Orion system. Of course, here we teach the Orion system and it is based around three simple principles. The daily bias, which is going to equate to things happening on the daily time frame, leading you into your intraday and your day trading. And then you have, of course, the areas you want to look at. Now, before you even move on to looking for an entry, you need to make sure that you understand these principles. Now, right here we have a daily bias. If you want to learn more about the daily bias itself, then make sure you head over to the Keep It Simple series on YouTube and you'll be able to learn the principles behind this. Now, when it comes to understanding your purpose in the market, all you need to focus on is, have I got a bias in place? Yes. Am I looking to trade today? Because the answer to that may be no. You may be saying, I don't want to trade today because of, let's say, I don't have time to be able to trade, or there's fundamentals that I don't want to be involved in, or there's something that I am not really willing to put myself in line with. As long as you make that decision off of the bat, that's fine. As soon as you take one step out of the decision you've made, so if you say, no, I'm not trading, and then you start looking for trades, you've already lost at that point. So you need to make sure that whatever decision you make, you hold fast. Now, once your decision is made, if the decision is yes, and you have a daily bias of, for example, down, all we need to do, this would be the same thing as well if we were bullish, is look for 2 points. And those 2 points, okay, are going to be where you want to trade, in this case, where you want to trade from, and where you want to trade to. Now, of course, remember this one thing. If you have a bias of down, price very often will just go to the point you want to trade to without going to the place you want to trade from. Okay? So what I'm saying is, if you have a bearish bias for the day, don't be hurt when price just runs bearish without you. That is a good thing if it does that, because it teaches you discipline and it teaches you that your system actually does deliver the directional understanding that you want. Now, by that I mean, if you're looking to sell into the lows and price travels down, awesome, you were correct. Price traveled in the right direction for you and you were correct in your analysis. But it's the point of, have we got into here for us to be able to sell down to the low that most people miss. Most people are just selling it. They get stopped out by the move that they were actually sort of waiting for. And then when the true move comes, they're not involved because they're too worried trying to buy the market, which has gone against their bias. And at that point, you've pretty much countered everything that you had in place in the initial sort of outlook of the market. So when it comes to being in the market, you need to know the reason you're in the market. Using the Orion system, you have 2 points to focus on where you want to trade from and to. These give you your entry and your target, right? You don't even need to worry about TP or stop loss or, entry parameters or risk parameters before you have these points solidified. So for example, here we have a daily bias and we have a high and a low. We want to trade from where? A high to where? A low. Awesome. Now, if we are lucky enough, so we go down to our entry time frame, if we are lucky enough to see price, I believe it's here, the 4 hour high, see price come to this point, okay, and we are now at the area we want to trade from. If we see something that tells us, yes, we can now look to trade it, this is where everything meets and everything aligns, and it becomes the Orion trading system, and the entry model is met. Now, of course, don't expect this to happen every time price reaches an area you want to trade from. Remember this, right? It's kind of like life. It's exactly the same as trading. You want a lot of things. We all want a lot of things. That's just the way we are. We're humans. We want. Just because we want it doesn't mean we're going to get it, right? So just because we want something and it gets to an area where we may be able to acquire that thing, don't, put all your eggs in one basket and say, I have to sell the market right now. Having the discipline to just sit there with your arms crossed and wait for the market to tick, 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 prove you wrong, and you go, cool, didn't trade it. That's the difference between you and somebody that's got to this area and has gone, right, I'll sell it now, -1. Oh, actually, no, I'll sell it now, -1. Oh, you know what, it's got really high now, and I'll sell it from here, -1. And they're -3 now for the day, whereas you didn't take anything because you knew what you wanted to see and what price was doing, right? So if we're lucky enough to get it here and it pushes up, doesn't give you anything, cool. We step out of the market. Your purpose, notice that your purpose hasn't even come into actually taking a trade. Your purpose is purely to observe and execute if price permits. Now, let's say it does permit. Say we're lucky enough to get an entry, right? Let's just draw this back in. We're lucky enough to get an entry, and price decides that it wants to break down, and we see a beautiful money out given to us. Only then can we start to contemplate stop loss, entry, and take profit. Now, unfortunately, most people have stop loss, entry, take profit at the beginning of this whole systematic and sort of, how would I say, executional based plan. Most people have that at the forefront, which is why it falls down pretty quickly, because trying to find an entry with the idea of where can I get into the market, where does my stop loss go, where's my TP go, that is not going to give you any consistent results. What that's going to give you is consistent losses. Now, based off of what we have here, we've made our way through our bias, where we want to trade from, where we want to trade to. We now have an entry given because we've waited for it to be displayed to us. Now, because of this, we can look and say, right, now we can start rubbing our hands together. There is potential for an entry to be met here. Now, even at this point, many people will just jump in and they'll just leave an order there and they'll come back to the market and it's done something like this. And they'll go, oh shit, I took a loss. This don't work, whatever it may be. But we need to understand the principle of this. If price runs away from an area and doesn't tap back in, the further away it gets from an area, the less probable it is to react. So having as well the idea and understanding that money is only going to cause reactions in the market if it is new money, that is a very big thing we need to understand as well. This is why we look for new money coming in at old money, for example, the old money being the high, and new money being the money out delivered from there, aligning with bias. So old money tells us price is going down, new money tells us price is going down. We now need to interact with that new money to be able to sell lower into previous old money, right? So notice what we've had right here. We've had a bias given. We've had a from and to. We're lucky enough to get an entry delivered to us. Awesome. We now set a limit. If the limit is triggered, we still have a from and a to. We only intervene if price moves past a certain criteria. Now, for example, the criteria that I generally use is like a basic framework model. The basic framework model of it is, if you have price sell past the 2R level, that's a B. That's a B. The 2R level. So for example, 2R on this would be here. Okay. If price sells past that 2R level, then you will cancel this order and you will say, okay, the trade didn't play out how I thought it was going to play out. That's fine. If it doesn't, and it comes back beforehand, triggers you in, if it runs your stop, it runs your stop. Oh well, just let it do its thing. If it doesn't, then we look to aim for the nearest area that we were looking to trade to, which again, we established on what time frame? The higher time frame that we had already in play, right? Which is here. So we can have, that is our from, and this is our to. So we'll go back down to the 15 minute. If I can stretch my chart out perfectly. Okay, now you can see where we want to trade from and where we want to trade to. Now, to and from, all good, but we must make sure that the distance between the to and from, if an entry is given, and only if an entry is given, equates to greater than a 3RR return. Okay, plus 3RR, it has to be greater than that. If the space between these two is not greater than that, then the probability of the system begins to outweigh the return on the actual execution. So by that, what I mean is, if you have a 50% hit rate and you're running 1 to 2, you will have a break-even system, right? If you have a 100% hit rate, not 100% hit rate, but if you have a 25% hit rate, for example, and you're running a 1 to 4, then you will also have a break-even system. So make sure that you understand the principle of how that works. So keeping in mind that the overall RR is going to dictate whether you actually enter a trade if it's given. That is a very key thing. Now, when it comes to excuse me, when it comes to price action actually giving an entry, on average we're looking at 0.3 days, give or take. So don't expect there to be an entry every day, because it's not that probable to give you an entry every day. So remember, when you're looking at the market, you're not looking for an entry, you're just waiting for your purpose to actually be given. And then when it is given, you can trade with the criteria that's met. But if you don't have the rules solidified, then you're obviously going to be chasing around entries, which is not going to be great. So always make sure that you follow the principles. So if there's any questions in the Discord, then we will take the questions. What is it now? 12 minutes in. I'm just going to turn the audio on. So if there is any questions, people can ask them. If there is no questions, that's all good. We'll just wrap up the session here, and I'll post it on Discord, post it on YouTube for people to watch later. No, all good. Sweet. Okay, guys. Well, if you're not in the Discord already, you're watching this on repeat. Link down below. You can join it, and you can be in our longer versions of these sessions. And obviously, we're going to do just general trading, sort of walking around the markets and having a look at things as well. So make sure that you join the Discord down below, and I'll see everyone in tomorrow's live stream, or whatever live stream you decide to tune in with. I'll see you all then, guys. Peace out.